All right, everybody, we're going to give it just a couple more minutes to make sure everybody gets in, and then we'll get started. If you have any questions, feel free to put them in the chat now, or you can wait till they pop up. So give us just a few minutes here and we'll get started.
How's everything going?
All right. Well, I have plenty of people on already. I guess I will just admit people as they come in and we can get going with this so I don't take up too much time of your guys' day. Before we get started, I just want to give a shout out to Chicago Title. You can probably see it behind my head here, but they're allowing me to use an office space today or one of their closing rooms so I can have quiet and get everything out to you guys. So I just want to thank you guys for coming first and foremost. You're probably going to have questions along the way. Feel free to throw them in the chat. I don't know that we'll be able to do a live Q&A based on how I have this set up, but we'll see what we get going here. It's the first one I'm hosting. I will be doing these at least once a month. So if you get good content out of this, or if you want to join again, feel free to send the link to any friends you may have or family that might be interested as well. But let's get started. I think one of the biggest things that I want to go over today is just kind of the process, first and foremost. I just want you, especially if this is your first time purchasing a home, to kind of understand what goes into it and how we get you all set up for that purchase. So the first thing is the pre-qualification. So I'll go over what a pre-qualification is as well as what a pre-approval is because they are different. So when you have a first phone call with me or another broker or lender, you're going to get just a pre-qualification more than likely. And what that entails is just a quick phone call with you, usually 10 to 15 minutes, I guess, depending on what kind of questions you may have. But that phone call, I'll ask you kind of what you're looking for, what area you're looking in. If you're looking for a single family home versus a condo, and there's reasons for that, because as we know, most condos have HOAs. And if we're doing a pre-qualification, we're going to want to get all the information that we can, or at least as much as we can. So on that pre-qualification phone call, we'll go over your income, what you do for a living, if you're self-employed, if you're hourly or salary, maybe you get commissions or bonuses, which we can use in a pre-qualification and a pre-approval, so long as you have at least a year experience. It's always better to have two because then we can kind of see how that averages out and if it's consistent. But another thing to mention there too is if you are self-employed, you don't necessarily have to have 2 years of experience, which a lot of people think you do. I know that a lot of people in this day and age, especially, have multiple jobs. We can use multiple jobs for income as long as there is a history. So if there's less than a year, a lot of times we can't use that second job. We'll use the one that pays the most or the one that you have the most hours with. But we can use multiple jobs if there is, in fact, a history of 12 months or more. So obviously 2 years is required by some lenders. But, I have over 270 lenders I can shop out for you guys. So there's very good potential that we can find one that will make an exception if they do have that as a firm rule. But that's the first steps. We go over the income, what you do for a living. We will ask you what your debts are. So if you are not sure what shows up on your credit report or what we may need to use, just tell us everything. We don't typically use things like mobile phone payments or obviously your current rent because that's going to go away. It's going to be anything on a credit report. But again, we can decipher what we need to use or not use. So feel free to just light us up with whatever you've got debts wise month to month, and we can use that towards the pre-qualification. The next thing that we typically ask you is if you know what your credit score is. That's a huge piece of the pre-qualification as well as the pre-approval. And then the final piece is down payment. If you have anything budgeted for a down payment. A lot of people are scared to take the move to have a conversation with someone like me because A, they think there's a cost to it. There's no cost to have a consultation with myself or anyone else in the industry to kind of just see where you are, get yourself lined up. If you're looking this month or a year from now, it's never too early to start because what if you have some debts that need paid off? We can get you lined up with a plan potentially to pay those off or pay those down or whatever the case may be. Work on getting your credit score up if it's not high enough. Um, so that's the initial steps that we take on that first phone call. If you've got questions, I mean, obviously the call can go a little bit longer, but we try to answer as many questions as possible up front. There's never a stupid question. So don't ever hesitate to ask. And if you need to ask 10 times, ask 10 times. I want to make sure that you understand exactly what you're getting into and that you're getting to that closing table with no additional questions in mind because we want it to be clear. If after that phone call, that email that I'm going to send you with those numbers, so you're going to get an email back from me after our phone call with a potential pre-approval number. So what your purchasing power is. It'll have a breakdown of what those monthly payments will look like, what your estimated taxes and homeowners insurance might look like, just so you can get a general sense of, okay, can I do this now? That pre-qualification will also have a an interest rate on it. The interest rates that I send out are always at par, which at par means you're paying very little to nothing for that interest rate. So you can buy the rate down. We'll talk about that here in a little bit. And you can also get a higher rate if you qualify with it, which will potentially provide you a credit that you can utilize towards your closing costs. We'll also talk about closing costs and what all that entails too here in a little bit, but I kind of want to just go through the initial steps first. If you get that email from me and you're ready to take the next steps and move forward with your pre-approval, that same email will also have a application link in it and the documents that'll be needed for that full pre-approval. Now, what does the full pre-approval consist of? It consists of the application. There'll be four main documents that I'll request from you, which are your driver's license. I need to make sure that you are who you say you are. Your income documents. So whether that is a pay stub, I usually collect 30 days worth. So if you get paid monthly, that'd be one. If you get paid bi-weekly, that would be two. That just helps me determine what your actual income is that I can use. And the income we go off of is gross. So it's before taxes are taken out. It's, it's going to be that larger number. If you're self-employed, then I'm going to want to see your tax returns or bank statements potentially, which I'm not going to get into the bank statement side of things today. If you are self-employed, you can definitely hit me up, send me a message or your email, and I can follow up with you via that. But we can qualify you with a bank statement income versus tax returns. So that is super helpful for someone who has been self-employed for less than 2 years. If you go talk to a bank, they're not going to probably do a loan for you if you don't have at least 2 years under your belt, because that's just, they don't offer all the different kinds of programs that I can offer. So I guess that leads to the other question of what types of programs and what's the difference between coming to a broker like myself and a bank. Banks typically can only do your conventional FHA, VA, and USDA. We have a bunch of other options for programs for self-employed. We have I-10 products for people who are foreigners coming over to live in the States. We've got down payment assistance programs, which I'll get into here in a little bit. Most banks do not offer that. They also have a very limited rate sheet. So they're able to offer you one set of rates, whereas I can shop out and get you the best deal at that current time at that specific day for that. So it's the best deal for you. Um, Banks also are not open nights and weekends, as you probably know. And if you have questions or are house hunting, when do you typically do that? After work, most likely. So I'm available for you to call and ask questions, do a pre-approval on the fly. Maybe you weren't gonna look for a house, but you're driving around on a weekend with your mate and you see something that you really like. You can call me and we can get the process going right then and there so you can make an offer on that house. Um, the next thing with the pre-approval is, sorry, I'm kind of jumping around, but I wanted to make sure I noted that. With the pre-approval, once you fill out your side of things, which usually takes 5 to 10 minutes, it's very simple. You can do it on your phone, on your computer. There's no need to meet up. You can do it at your own convenience. Start it and stop it as you need. Once you fill out all that information and we get a credit report pulled, you can upload your documents directly to the end of that application. So it's secure. It comes directly to me. Um, there's no need to print things out and mail them in or bring them to my office or whatever the case may be. So no matter where you are, you can get this process started and done pretty quickly. Once I have that, then I take it over and I run automated underwriting. So we have that initial underwrite on your file. So if there's any other documents that we may need, we can get those up front before you're under contract, and things just go a lot smoother once we do that. So I had a question come in here. Hold on one second. So a question is, what happens if one of us has bad credit, not because of bad credit, but just no credit history? Um, we can do no credit. We can do loan files with no credit. The lenders that do offer them are a little bit more limited, so we may have a smaller box that I could shop out of programs, but we definitely can do that. There are some lenders as well who only require one person to have a credit score. And there's also some others that will take the mid score of the highest wage earner. So there's a bunch of different options. And until I have a file in front of me, I don't even know what I need to shop out. But I definitely that's part of the job, and that's part of what I like is to find a home for a loan so that I can get more people into more houses. Um, that's one of the things too. Like if you do have bad credit, there are ways to get it up fairly quickly. And one of those that's super easy is to get yourself put on as an authorized user on someone else's credit card. You don't even have to have access to their card. You never have to use it. But let's say you have a parent or a sibling or a friend that's willing to put you on their credit card. They have, I mean, obviously you want them to not have any late payments because that's going to hurt your credit worse than it's going to help it. But you also want them to have a high credit score. So if their score is high, you'd be shocked at how quickly your score can jump up. I mean, I'm talking as little as 30 days even. So if it is low or you don't have one, that's a good way to go about doing that as well. You can open up a credit card and just start using it for groceries and pay it off right away. That will boost your credit score as well because it starts creating that what do you want to call it? That I'm drawing a blank on the word right now, but it's building up that history of credit so that your score can improve. Um, so that is a couple good ways. One thing, since we are on the topic of credit, is I don't know if you knew this, but if you do have a credit card and you're like, I pay my debts, I pay my bills every single month, but my score is still not coming up. What's going on? There's a little rule of thumb where if you have a credit limit of, let's just throw out a number there, 5,000, and let's say you spend 5,000 every single month. You pay it off every month, but you're maxing out that credit line every single month. That is why your score is either getting worse or not changing. 30% is where they like to see that number. So if you do use your credit card, like I do every single month instead of a debit card or something, either ask to have that limit raised because a lot of them will do that, or spend it up to 2,000, pay it off, if you can. I know with paychecks coming in as they do, that sometimes is difficult. But if you can do that and just make payments 2, 3 times a month instead, that will help boost your score and or, keep it from getting worse. So those are two things that you can do to boost your credit score if it is kind of on the lower end. And speaking of that, we do loans for people down to 500. So there's a chance that you can get a loan if your score is in the 500s. Now, keep in mind, your interest rate's probably not going to be very good. The lower the score, the worse the rate. Um, and that is a question that I get all the time, right? Is what are rates today? Well, I can give you a general idea on where they are, but there are three main factors that come into play when it comes to an interest rate. The first one, obviously, is your credit score. So if your credit score is, 500 or 580, you're probably going to be looking at least a point, maybe 2 points higher than what everybody else is going to get. And that's just because the banks don't trust that you may pay your bills on time. They don't know why your credit score is low, but the thought is, or the risk for them is that you don't know how to handle your debts. You don't know how to handle your money, and so you're not going to be able to maybe pay your house payment. So they adjust that rate so that it's less risk for them. They're able to collect more interest on you, and it kind of covers their butt a little bit. The other thing that comes into an interest rate is your debts. So your debt to income ratio, which is what DTI stands for, if you've ever heard that. That is the biggest thing that we use to get you pre-approved. And if your debt to income ratio is 50% versus someone else's who may be 43%, they're going to get a better rate than you are. And that's just because they have less debts. Their ability to pay back that loan is a lot better than someone who is a little more like strained month to month. The third thing is the LTV, which stands for loan to value. So if you're coming in to buy a house and you're putting down the bare minimum, which, by the way, on a conventional loan for first time home buyers is only 3%. So a lot of people think you have to do 20%. You don't. A lot of people do 20% to avoid mortgage insurance, but you don't have to do that. So it's 3% on a conventional, it's 3.5 on a FHA loan, which that's across the board, no matter if you're a first time home buyer or not. VA, you don't have to put anything down. It's 100%, they will fund it. And USDA is the same. So you don't always need a down payment assistance program, but if you do, again, we'll talk about that here in a minute. But I'm losing track of where I was at there. But those are the three main things that go into your interest rate. So I can definitely give you an idea, but until I have a full file, it's not going to be a definite, which is why getting that full pre-approval is super important. And by the way, I don't know if we have any real estate agents on here because I do get those sometimes with first-time home buyers. If where was I going with that? Sorry, I got too many things on my mind right now. I guess I'll come back to it. The pre-approval side. Oh, that's where I was going. So a lot of people go to a real estate agent first and start looking for houses. They don't even know what they can afford. So it's kind of important to get your pre-approval first because it saves you time and heartache, essentially. What if you start going and looking at houses that are 200,000 more than what you can afford? You're going to be a little disappointed once you're starting to look for the house that you can afford because now you've got these views of all these other beautiful homes that you're not going to be able to get. And also, it wastes the time a little bit of the real estate agent because they're showing you and they're driving around and showing you places that you're not going to be able to make an offer on. And the other cool thing about getting that pre-approval up front is that if you do find a house, you're able to make that offer right then and there because 99.9% of the time, a seller is not going to even look at your offer if you don't have a pre-approval letter to support it. They're just not. So if you have it ready to go, you can make that offer and potentially win that deal a lot faster. Um, Speaking of the whole pre-approval and shopping, uh, when you go out shopping, everybody always thinks too, you got to have money for the down payment. You got to have money for closing costs. Well, right now, with it being more of a buyer's market, which means there's more sellers than there are buyers, and also as a buyer, there's going to be less offers made. So there's chances of you winning the deal are a lot better. Your real estate agent can actually help you try to get seller concessions. Seller concessions are monies offered by the seller to help you pay for closing costs. So I have done deals where the buyer, also known as you, doesn't even bring money to the table. I mean, they do have to pay the upfront appraisal and the upfront credit report fee, but that money is always credited back to you at the closing table anyways. And if you get seller concessions that cover most or all of your closing costs, you may not be paying much of anything for your house other than the down payment, unless you're doing down payment assistance. So, and speaking of down payment assistance, we do have a bunch of programs for that, and they offer anywhere from 2% for your down payment all the way up to 5%, which can help with your closing costs as well. So you do have to qualify. There are some of my lenders that require you to have at least a 620 credit score, but there are others that are lower than that. So just keep that in mind. I also have a grant program that will give you money for helping them do research, in a sense, for your down payment and or your closing costs. So there are options out there. Don't think that because you maybe don't have anything budgeted for a down payment that you can't get into a home. I mean, obviously, you're going to get a better rate, you're going to get a better deal if you can bring your own money for your down payment and closing costs. But that doesn't mean that you can't get into a home. So I have another question that popped up here. So what if I make a lot of money on paper, but I have garnishments that take 65% of my wages? Um, Unfortunately, they are going to look at that. I guess it depends on what it is, but if it's things like alimony or child support, anything that's court ordered, especially, they will take an account for that. That will be included as a debt that you owe. It depends on how long you have it going for. So let's say your child is going to be an adult in a year or even 3 years. So up to 3 years, we can ignore it because it's going to be going away. If it's over 3 years, we always have to include it. So um, that's just the facts of how that works. And especially if it's going to be a government loan, there's no way you can get rid of it then. But I mean, conventional doesn't allow it either. It is a debt that you owe. So unfortunately, that would have to come off. That's a good question though. All right. So let's get back to the basics. Credit pulls. So I know a lot of people are really scared about having their credit pulled by a mortgage company or anytime really. But when a mortgage company pulls your credit, it does not affect your score like opening up a credit card or when you go buy a car. Car credit pulls are probably one of the worst from what I've heard, and it will drop your score quite significantly. So if you're thinking about buying a home and you can get by with that car that you have, I would highly suggest you wait until after you purchase your house to do something like that. As well as, if you're shopping for a home and you're like wanting to start furnishing the house, you get super excited about it. And I understand, but do not open up a new credit card, and go spend a bunch of money on furniture right before you go buy a house. Because now we have to hit you with that debt. I know you want to, but wait till the closing table and then same day you go close, you can go hog wild, go do whatever you want. But wait until we close on that house because that's gonna hurt you more than it's gonna help you. It's gonna hurt your credit. It's also gonna hurt your debt to income ratio. So don't do it. Anyway, with a mortgage pull, you're talking 5 to 10 points, maybe. And that credit pull, you can have your credit pulled because I know people shop, and you're welcome to shop people out. But you can have 100 different mortgage companies pull your credit and it affect you as one pull. And you have 30 days to do that. So I know a lot of people start looking with one lender or another, and then they're like, you know what, I don't really appreciate how this person's working with me. They're never available. So they go somewhere else and they're really scared to because now you got to have another credit pull. Well, it's not going to matter, especially if it's been within that 30 days. So just keep that in mind. And we can do a soft pull up front. Soft pulls will still cost you money, but it's not going to ding your credit. You're not going to get a ton of phone calls from people, which, by the way, I always send out two different links for people to fill out. One is a do not call list. So fill it out. Do not call and opt me out, I think it's called. This something like that. But I always send that out to my clients so that you can fill that out before we do a credit pull. Because I'm telling you, once you pull that credit report agency that not just that we use, that everyone uses. They all use something different, but they all do the same thing. They sell those leads to other mortgage brokers. That's how they make more money. So we definitely do not sell your information, but the credit report companies do. And I'm not kidding you. I did this to myself accidentally a couple of years ago. I pulled my own credit because I was looking to buy a house and I got bombarded with probably 200 calls easy in a week. And I do my own loans, so it was really frustrating and annoying for me. So I can only imagine how annoying and actually confusing it can be for a home buyer, especially if you're first time, because you have no idea. Is that person from the same company? Why are they calling me? Are they helping the person I just was talking to? Like it's really confusing. And so those links, and yes, I just had someone ask if I can share that link. I definitely can share that because even if you're not looking to buy a house, getting on those two call lists is super helpful for just spammers and whatnot in general. I mean, you're still going to get them, but it does limit it. And the soft pulls don't hurt your credit at all. So there also is and I'll put it in the chat here actually. If you're kind of curious on where you are with credit, there is it's called annualcreditreport.com. Putting it in the chat right now. That you can pull your credit. Anybody in the United States can pull their credit one time a year for free. Doesn't hurt your credit. It's a soft pull, but it'll actually help you track if there's stuff on there that you didn't know. Maybe there's something in collections on your credit report that you're not even aware of, and that's why your credit score is plummeted or is not getting better. You can also see if anybody has used your information and opened up a credit card or some sort of debt that you weren't aware of. So that's kind of a good thing to keep, or to not keep, but to do.
Wait, it's open.
See. I only sent it to one person, so I'll resend it here and we can, that way you can use it if you want to. But every year you can check that. And I always advise it. I do it myself just to make sure that there's nothing on there that isn't mine, that is something that I'm not aware of, or collections that I wasn't aware I got sent to. So it's a good thing to do. All right. So I already mentioned that you have your pre-approval and you can go start making offers. What I didn't recommend, or what I didn't say, is that once the offer that you have is accepted, that's where my job truly kicks in. So once we're under contract, I will take that contract and get it submitted to whatever lender we choose, which you're very involved in that. Not involved in the shopping process, but I find the best deal for you. You tell me kind of what your goal is. I find the best deal for you, and then you get to pick which rate you want to lock. Once we do that, I submit it. We get disclosures out. Once you sign those disclosures, we're off and running. I then hand it over to my processor, and you're going to probably hear more from my processor than myself throughout the rest of the days to closing, because she's the one in the nitty gritty. She's the one that's going to be working with the underwriter directly and getting us to that closing table. Now, I'm always going to be available 24/7. I do need to sleep sometimes, but most of the time I am available. So if you ever have questions, you can always call and we can chat through whatever you need. But you're going to hear more from my processor during that time frame than myself. Once we get all of the conditions cleared from the underwriter, we get that CTC, which is our favorite 3 words, stands for clear to close. And we get those initial or those final disclosures out to you so you can review them ahead of time. We can go over anything on that ahead of time. So at the closing table, we're just in and out. We go in, sign the documents, and you get your keys to your new house. So that's exciting part. That's about it for the process. Are there any other questions out there right now that I didn't address already? And I'll double check here. If you have any questions, feel free to put them in there. I can go over at least a couple that I get a lot. I mean, I already talked about one, which was the rates. The other one is what FICO score do you need, which we kind of went over already. But if you're looking at an FHA loan, you're anywhere from a 600 to a 680 is really good there. And I know a lot of people think that that is not a good credit score, but it actually is when you're looking at a government program. If you're a veteran, the VA really doesn't care what your score is. I have heard stories from some colleagues of 400 even getting into a house as a veteran. with 0% down. So it's possible. Don't think that you don't have what you need to get going on purchasing a home. Just call someone like myself and let's talk about it. Um, let's see what else. What about what can I afford? Well, I think we kind of already talked through that process. You'll want to definitely get on a phone call with me and get at least a pre-qualification. And that's what I recommend if you're kind of on the fence, you're not sure if you're going to buy right away. Still, let's have a phone call. Let's talk about that pre-qualification and just get a general idea of where you are. And if you're at this spot that you need to be for the purchase price you're looking at or for the area you're looking at, um, you don't have to do anything then until you're ready to pull the trigger and start shopping. And also a pre-approval or a pre-qualification is pretty universal. And I say pretty universal because it does work state to state in a sense, but not 100% accurately. And the reason I say that is because tax rates change per city, per state. So your pre-approval may fluctuate somewhat. I'll give you a good example on that. I'm licensed in 5 states. So I'm licensed in Colorado, Nebraska, Wyoming, Florida, and Texas. Tax rates here in Colorado, where I live and where I'm currently at, are around 0.7%. If you go to Texas, that more than doubles. So you're looking at 1.5%. That greatly changes. I mean, if you're looking at a house at 400,000, your taxes here may be, 250, 275 a month. In Texas, you could be looking at 6 to 700. So that can greatly change your pre-approval amount. But there's not a whole lot you need to do different. So let's say you're starting to look at a house in Colorado and you decide Colorado's rate or purchase prices, housing prices are too high here, which they are, and you want to go to Wyoming instead. Cool. All I need to do is have you tell me that, and I rerun your pre-approval, and we're good to go. I don't need anything else from you, no documentation, no anything. So don't think like, oh crap, I got a pre-approval for Colorado. Now I got to start all over again because I want to go to Nebraska instead or Wyoming or whatever. That's not the case. It's pretty simple. It's pretty simple. Someone's saying Kansas. Well, I can't help there, but directly. But I do have colleagues who can help. So if it is a state that I can't do, I do have colleagues that can offer you the exact same thing and can just hand you off. It'd be quick and simple transition. I have everything already done. I have your full file. So it can be super simple process to just switch you over. How is a pre-approval determined? Good question. We kind of went over this, but I'll try to put it in more of a nutshell. So the pre-approval is the application, your documents that I told you about already. So your driver's license, your pay stubs, your bank statement showing that you have money of some kind, even if you're going down payment assistance or planning to not bring money. And by the way, I forgot to mention this. You can do gift funds. So if you have a family member who's rich and wants to give you some money, we can do that. All we need extra is a gift letter and their bank statement showing that they actually have the money to give you. So I don't have that, but I'm sure there's some people out there who have some pretty cool friends and family that, well, friends you can't necessarily use, but family definitely you can. So anyway, pre-approval, back to that. I'm all over, sorry. Income, bank statements, W-2s. I did not mention that, but you do need to send me your W-2s, or if you're self-employed, like I said, tax returns and or a 1099. And then your driver's license, and that's it to get the process started. So I know a lot of people are scared of the pre-approval because they're like, man, I don't have time. I don't have time to get all this information together. But it's 4 pieces. It's 4 documents that you need up front and the application, which, like I said, doesn't take long. I've done it myself because I wanted to see the process from your guys' side. It doesn't take long at all. So it walks you through everything perfectly, and that's it. So the pre-approval is determined by those pieces of information. We use that information to calculate your debt to income. We ask you, what loan to value, like what down payment are you bringing, and credit report. The credit report's the biggest piece. I can't give you a full pre-approval without a credit report. And the biggest reason is because that automated underwriting system that I told you we use, I can't run that. I can't even run that with a soft pull. It has to be a hard pull. So I can get a general idea and get you pretty darn close with a soft pull, but I need a hard pull in order to get you that full pre-approval. So that's pretty much it for how the pre-approval is determined. Let's see. Get some other questions. What about I have a lot of people that say, why do I need a pre-approval letter to shop for a home? I kind of went over that. I mean, if you were selling your house and you had somebody make an offer, do you think that you would accept it without a lender saying, hey, yeah, these guys are good to go? I've looked at their information, I've pulled their credit, they aren't going to have a problem. I mean, if you get an offer and you accept it and 3 weeks down the road, you now have a default because they're not qualified. You've now wasted 3 weeks of your time and of your house because you more than likely aren't accepting any offers anymore. What if you needed to move in 4 weeks? What if you needed to get to your next job in another city? Like, you've wasted a bunch of time. So that pre-approval letter is super important for not only yourself, but for the seller and also your agent, because your agent's going to want to make sure that they're not making offers on your behalf that you can't qualify for. So those are pretty big reasons on why you should talk to someone like me first. I know a lot of people go the opposite and they're super excited. They want to go start shopping for a house and they go to the realtor first, which is great. You can get some ideas, but it's a lot smarter for you to start with your financial piece first to make sure that you can get into what you need to. I mean, if you're a cash buyer, obviously you don't need someone like me, but you also can get money back from that as well down the road. So maybe you're super rich and you don't need someone like me to purchase your house. But then you're like, oh crap, I just spent $400,000 and my car broke down. I don't have any money to go buy a new one. We can do it's called a deferred financing, and we can refinance you the day that you close on your cash purchase to pull back out 80%. So now you've probably won the offer because who's not going to take a cash offer over a loan offer? Two, you didn't need an appraisal, so you didn't have to wait, 2-3 weeks because the appraisal sometimes takes a week to do. You can get into that home quick. The seller wants to sell quick, you want to buy quick, that's a great way to go. But then you can turn around and get up to 80% of that money back. So you can utilize it for whatever, invest it, buy a car, go buy a different house, whatever you want to do with it. So there's a bunch of different options when it comes to the lending realm. Are there any other questions? Let's see, I want to make sure that I went over everything that I was planning to go over as well. Oh, when it comes to the application piece, there will be several compliance documents that I send out. They're required by our company. They're required by the whole rules and regulations in this industry. That does not tie you to me. So let's just say you don't like working with me. Let's just say you decide, I'm not quite ready yet. I don't want to jump the gun right now. I just wanted to see where I'm at. That document doesn't hold you to anything. It just keeps me in compliance with the rules and regulations. So when you receive that, don't freak out and don't think, oh crap, I don't want to sign this. I just want to stop everything now because I'm scared now. And I don't think that. It's just for compliance purposes. If I don't have you sign it, I could get in trouble. So um oh, let's talk about real quick par rates and buy downs. I did not go over this, and I know this is a lot of information. You are going to get this recording of this webinar within 48 hours of us completing this, unless technology goes wrong and hates me and it doesn't work. So you'll be able to go back through and listen to this. If you have any questions after this, feel free to email me. You should have gotten some emails from me by now. If they weren't directly from me, I definitely have yours so I can follow up, and I will follow up with that webinar recording. So you'll have direct contact with me. Never hesitate to ask questions. like I said before, no questions are stupid. So rates versus the buying down the rate versus a buy down are two different things. So everybody thinks the interest rates are so high right now, which compared to our lovely, I'm not even going to say the word, when we were shut down and we were in twos and threes, we're probably never going to see those rates again, unfortunately. Not at least in my lifetime. So don't hang on to that as a reason to not buy right now because you're probably going to be waiting forever. These rates that we're currently in, which are mid sixes to mid sevens, are lower than they were before that horrible 2020 timeframe. So you're still getting into a good rate. Rates used to be 18%, if you can believe it, in the 80s and several times since then. So, and people were still buying. I mean, that didn't stop people from buying houses. So buying down the rate is you using your own money or using the seller concessions or using a gift fund to buy the rate down permanently. So if you're buying it down from a 6.875 to a 6.5, you're going to be putting some money in of your own for that rate, but then you're going to have that for the life of the loan. So 30 years or until you refinance it or sell it. A rate buy down is only doable with seller concessions. And what that does is, I'm going to just mention one of them for ease and to avoid confusion here. If you do a 2-1 buy down and you are locking in a 6.5% rate, let's say that's the par rate. If you're doing a 2-1 buy down, your first year, your rate is going to be 2% lower. So you're actually going to be paying 4.5% that whole first year, which can be a couple $100s of savings every single month that first year, which you can then save for later. You can reinvest. You can, what I would personally do is put it in a savings account and have it for that next, 2 years down the road when that interest rate goes up. That second year, you're going to be paying 1% lower, hence the 2-1 buy down. So the first year, you're 2% lower. The second year, you're 1% lower. And then that third year, you go back into that full 6.5% interest rate for the rest of the time that you have this loan. I'm actually going to put in, let me pull this. So I have a video that actually goes through what I just discussed on my YouTube channel. And I hate looking at myself on videos, so don't judge me when you go look at this. But if you want, I've got a bunch of content in here that goes over a lot of different programs, some facts about the finance piece, what a refinance means, what a conventional loan actually means. Like I just go into a lot of detail on a lot of these programs, but I definitely dive into this buy down that I just mentioned with a spreadsheet. So it's visual. You can see what it looks like. It has the amount of money. So if you're on here and you're a real estate agent even, it shows you the estimated money that you would need to ask the seller for in order to do a 1-0 or a 2-1 or a 3-2-1 buy down. So you can ask for that up front. It also shows you as a buyer what your savings are going to be and what those monthly payment differences are in each of those different year stages. So I'm sending that over now for my YouTube channel. So you can go check that out. You can check out the content that I have on there. Critique me. Let me know in after you've watched it, what you liked about it, what you didn't, maybe some questions that you have surrounding it, and I will jump in and answer those for you. But that'll just give you a little more insight than just this webinar right now. Like I said, I'm going to have one every single month. So if you did get what you needed out of this, great. If you didn't and you want to come again, or maybe you did get good content out of it and you want to still join again and ask more questions, you can always email me and ask questions, but you're welcome to come back and join these anytime as well. Let me just make sure here I don't have any other questions, and I'll try to think of some too that I do get a lot. Let's see. Well, I either did a good job or everybody's sleeping out there. Well, I guess we will get to end this a little bit early today, but again, thank you for joining. And if you have any other questions, like I said, I'll send that. If you don't have my email, I'll be sending that this webinar recording out here within the next day or two, depending on how quickly it is available. And then you'll have my email. So feel free to reach back out anytime with questions, or if you're ready to go, definitely hit me up. You can send me your email directly now in the chat if you want. I'll leave this open here for a little bit too, once I complete, just in case anybody else has any questions or whatever. But I will also put my email in here. I guess that would be easier, huh? And that way, if you have questions now, make sure I spelled it right, that you can just email me now after this and we can chat some more. I love talking to people. I love getting to know what you like to do in life, what you're looking for in a home, all of those things. So it's not just about business. I'm a people person too and like to get to know my clients. So if nobody has any other questions, let me make sure I go over my sheet one more time here. And I can let you get out of here early. I appreciate y'all joining again, and I hope you have a wonderful day. Thank you so much.